Hi everybody, my name is Bookie and I'm here for the Good Eve channel. And today I'm going to be talking about what is a financial plan. So in this video, what you can expect to get is you keep hearing about have a plan. Those who fail to plan, who plan to fail, have plans to succeed. So what is this financial plan about? By the end of this video, you'll have a good idea and an understanding of what exactly a financial plan is. And perhaps you'll also have an understanding of if this is something that you want to put together for yourself and how you can begin, perhaps because you'll know all the elements of a financial plan, to put that plan together for yourself. But definitely you'll understand what is a financial plan and how it applies to you. So, what is a financial plan? Well, the first thing I'd like to tell you about a financial plan is please subscribe. Hit the like button, comment, and share. Help me to share this video to other people who perhaps don't know what a financial plan is. If you're trying to help your friend who's always borrowing money from you, who always seems to have financial troubles, this might be a good idea. Share this video so that they can go on and share it to them too. So, like, subscribe, share. Now, a financial plan is a written down document that captures all your assets, debts, inflows, and outflows. It includes all your money goals, short, medium, and long term, and should be the money expression of your lifestyle and your dreams. It is a living document, which means it evolves and it changes. And you should be reviewing and updating your progress on your financial plan on at least a monthly basis to track your progress, if your goals also need to be reviewed and changed or updated. Now, according to Charles Schwab, good components of a financial plan are: one, your financial goals. And with this, your financial goals are, do you have a number in mind specifically that you want to hit? Or do you have a number in mind, or a home or an area that you would like to live in? What will it cost for you to live in that home of your dreams, or that home of your aspiration? And even if that is the first step to getting to your dream, that's not your ultimate dream. As a first step, what is your dream? What are your plans? What is your aspiration? So financial goals, it's important that you have those written down and listed out, because those are the things you're working towards. Second, a part of your financial plan must include a net worth statement. Now, a net worth statement deals with all the assets you own, your house, your car, if you have stock, if you have shares, if you have equity in a business that generates income for you, if you have any kind of passive income streams. And then it also includes your debts. Are you owing the bank money? Do you have a mortgage? Have you taken a loan from your office? It includes all those monies that you own. As we would say in Lagos, all the gbese that you are owing. That is also part of your net worth statement. So you take your total assets, the things you own, and you just subtract your total debts. And the difference, whether positive or negative, is your net worth. It's amazing how many people actually, especially in their 20s and 30s, have a negative net worth. So don't beat yourself up too much about that. It all depends on what you took out loans for. If you took out loans to invest in assets that will appreciate and generate income over time, then hopefully it might balance out if the interest rates and the terms of your loans are not too bad. They're kind of fair. All right. So first, financial goals. Second, net worth statement. So third, you need to have a budget, i.e. your personal cash flow statement. So a budget talks about every month you get a salary or you get a certain amount of income. How is it spent? How is it saved? How is it invested? What are those critical things that need to be in your budget on a monthly basis, on an annual basis, on a quarterly basis that you must make sure that you account for, provide for? So having a budget is really important in a financial plan, because if your goal, for instance, is to live in a home that is in a highbrow and a luxurious area, and you need to gather the equivalent of $1 million for that, you can't be just putting away out of your budget a difference of $100 a month. You're probably going to have to do a little bit better, actually a lot better than that, if you're planning to get to that home based on your financial goal by a specific time. So important that you have a budget set out. Now, the next thing that should be part of your financial plan is your debt management plan. Now, there are very few of us that have absolutely no debts. Everyone has debts these days. And the debts, there's good debt, there's bad debt. And so depending what kind of debt you have, it's important for you to have a plan about the order, sequence, frequency by which you pay your debts. Paying your debts in a timely and proper manner can open you up to get more good debt should you need it to expand your business, or to go into business, or to buy more properties if you're trying to do something in the property space in form of passive income. So that leverage can be multiplied if you have a good reputation and a good credit rating for repaying your debts in full and on time. So a debt management plan is an essential part of a financial plan, because you need to, as part of your overall financial plan, ensure that you keep your eyes on the ball in terms of repaying your debts. A next thing you need to have as part of your financial plan is your retirement plan. What's your plan for your 65-year-old self? You may be 20 today, or you may be 40 today. You may be 45, but when you're 60, 65, what are the things that are going to be really important for your 65-year-old self? And a lot of times, all we need to do to think about what we'll need in retirement is to look to our parents, should your parents still be here, or your aged relatives. There are usually a lot of healthcare costs. There are a lot of, you want to have secure housing. You don't want to be worried about the rising cost of housing and food and consumables and expenses and things of those nature. So you need to think through it and say, a good number you can use that was recommended by Charles Schwab was to think about looking at 80% of your current expenses today. Use that as your calculated figure for what you'll need in retirement. And then if you think about, okay, my retirement plan, I want to retire at 40. And if you're 35 today, that means you have 5 more years to retire. But if you retire at 40 and you're estimating, you're projecting, I'll live until I'm 90, you have to think about having enough income for 50 years while you're retired and not really actively engaging in labor. So if your retirement plan is for 65 or 70 and you're also estimating, I'll live to 90, then it's a shorter tenor till you get to where you want to be. So your retirement plan takes into consideration when you want to retire, how you want to retire, where you want to retire, and then it makes you think about what will it cost for you to be maintained adequately in retirement. The next thing that should be in your financial plan are emergency funds. And for emergency funds, a good rule of thumb you should think about are having 2 different buckets of emergency funds. So first, you should have an emergency fund for your 1 month expenses. So if in a month, the total amount you spend in expenses, for instance, is, I'll just pick a figure, $1,000. Then you need to have an emergency fund of $1,000 in cash, in near cash, in bank, that you can get access to with basically 12 hours notice. So that if there's a major unexpected expense that comes up, you're not scrambling, trying to get quick debt, trying to get quick loans, begging friends and families to bail you out. you have that money, you can grab it and you can close and shut the bleeding, right? And it won't force you to be in a situation where you have to break an investment that, for instance, has a tenor of 1 year and you pay, or 2 years or 20 years, and you have to pay penalties or sell that investment at a significant loss just to stop the bleeding at that time. The second bucket you should have for your emergency fund is one for in case of what we would consider long-term injury or long-term job loss. And so you want to be able to have a bucket of funds that, and this can be invested in something, maybe like a CD or fixed income or fixed investment that gives you a fixed, interest. Your capital is kind of guaranteed. It has a tenor of not more than 1 year, something like that you can break and maybe only get a penalty on your interest should you need it. And you want to put away in this type of emergency fund at least 6 months equivalent of your monthly spend. And when I say 6 months, you also need to prorate annual expenses that may not usually come up in a month. So for instance, if you have children and you pay school fees 3 times a year, but you calculated for your 1 month, you didn't include their fees, you definitely want to include a prorated amount of 50% of your total school fees expenditure in, for instance, that 6-month emergency fund. Because for instance, should you be out of work and not earning an income for 6 months, you would still want to try and pay your children's school fees without there being disruption to them. So that's the essence of having 2 buckets: an immediate break in case of emergency fund, that's about 1 month's equivalent of expenses, and then you want to have a second fund that would cover 6 months equivalent prorated annual expenses. Another thing you need to look at being a part of your financial plan is insurance coverage. I know. And for insurance coverage, you want to think about health insurance, you want to think about life insurance, you want to think about homeowners insurance, you want to think about car insurance. Basically, anything that's essential to your life that can be insured for a reasonable sum, you really should think about getting insurance. Now, I know people like to say, well, we'll just pray and hope, and I live in a safe neighborhood, nothing could ever happen to me. But the thing about insurance is the amount should be reasonable enough that if nothing happens to you, you can pay it. But if something did happen, you'll be ever grateful that you don't have to pay out of pocket for it. A lot of times for a lot of people, life insurance becomes a very sensitive topic for them, depending on your culture. People feel that it forces you to talk about death. But the reality is, if you have young kids, for instance, and you have school fees insurance, for instance, and God forbid something happens to you, you become injured or you die, or the breadwinner of the family dies, you'll be glad that they put in place insurance that will ensure that your children can continue going to the caliber of school you're accustomed to until they finish. So at that point, you're glad you did it, but when it's time to have the conversation, it's always very sensitive. But I think that the more we get comfortable hearing about these things and taking the proactive steps to put them in place, set them, pay them, forget them, I think we'll be better off. So an essential part of your financial plan is making sure that you get adequate insurance coverage. The final point I'm going to touch on today that should be part of your financial plan, and this is following on from the insurance and talking about death, is to make sure that you have an estate plan. You should have a will. You should have a will that spells out what you want to happen to your assets when you die, who you want to look after your children if you happen to have children should you die. You want to talk about your living will, which talks about in terms of healthcare. Do you want to be on a respirator? Do you not want to be on a respirator? Do you want to be resuscitated? What do you want to happen to your organs? All the things you do. Where do you want to be buried? Because in some cultures, they want people to be buried in their hometowns. You may be happy with yourself being buried immediately. Some cultures, they want to wait 2 months before they bury. So especially if you know you have views that are counter to what is the normal acceptable thing in your culture or practices, it's important that you protect your family and the loved ones that you leave behind by putting in writing your intentions for after you pass away and you're no more. It will save your family a lot of grief. It will save them a lot of money. It will ensure that your assets go to whom you want them to go to, not to someone else because you didn't make a plan and the state now needs to take over. And also having a good will and estate plan in place will ensure that it's faster. If you have those things in place, the process to getting your will sorted out, to getting your assets probated and handed over to the right parties, it's just so much faster because there's no confusion and the law is clear, and so they'll follow the legal mandates that you leave behind. So I think with these 8 points about elements that should be part of your financial plan, I've given you clarity on what should be in your financial plan. Now, I just want to take a moment to talk about why you should have a financial plan. If you look at the different elements that are supposed to be part of your financial plan, it's serious business. And the truth is, a lot of people don't even know where all the assets of their loved ones are. A lot of people don't even know where all their assets are. And when you begin to sit down and put together your financial plan, it gives you a full picture. This is me as a person. This is my lifestyle. This is my aspirations and my dreams. And I can see why I'm struggling to get to where I want to get to, or why I'm doing quite well. Does my financial plans, my behaviors, my budget, do they support where I'm trying to go or where I am today? Will they power my dreams? So it's really important that you begin to look at your financial plan. It'll make it easier also for you to say no to some things you need to say no to. And then you'll realize there's some things that you're deficient at. Oh, I need to boost my passive income, for instance. And it'll make it easier for you to say yes to certain opportunities that you should be exploring, even if they have a certain degree of risk. So today I've discussed a financial plan and the elements of a financial plan, and I'd like to encourage you to begin to put together your financial plan. Just take it step by step, take each element one by one. And it's not something that when you're building it for the first time, you'll probably complete in a day, but you'll be surprised if you just work on it for an hour, for a week. At the end of that week, you'll have a really good picture of where you are. So remember to subscribe, remember to like, and remember to share this video. Bye for now. I'll see you on the next one.